Hello everyone, welcome to your weekly Onchain review. This is your host Kai. I hope you find value in this Onchain video. Let's go ahead and dive right in. So last week we saw some very important metrics and we saw that Bitcoin was trading at below its most critical levels. This included the 200-week moving average, the general cost basis of the market, that is the realized price, which is between 22,500 and 23k. Then the cost basis of the long-term holders and short-term holders, and 2017 all-time high. We also saw the number of Bitcoin addresses which were holding Bitcoin above 1 has reached its all-time high of 877,140. We also saw MVRV was below 0.5, which was an oversold region, and we saw SOPR in negative for both the long-term holders and short-term holders, which means that if both the cohorts, long-term and short-term, they were selling at a loss. We saw last week funding was negative. Now it has turned to neutral to positive after the move last night. Puell multiple is in the oversold region. Whenever it is around 0.5 or below 0.52, it is a area of value. It means that the miners are selling at their break-even point or at a loss. This generally has given us a bottom signal, though historical bottom is still below, but this area remains the area of value for us. We also saw net unrealized profit hit its 3-year low. The network was not in profit. The loss was hitting an all-time high, 3-year high. And we also saw Bitcoin illiquid supply was hitting its all-time high. So we drew a conclusion last week that Bitcoin, when it is at 18k or 19k, it is in a territory which is an oversold territory for the market. Let's look at the movement of whales in the market recently and compare it to the historical data. So whales are the participants whose holdings are more than 1000 bitcoins. So what we have seen is the change in their net volume to which they have sent to exchanges. So what we see in this chart is that when the price was between 17,600 and 19k, we saw that the whales were adding to their balances aggressively. They acquired around 140,000 bitcoins per month directly from exchanges. Now the position stands that the whales own around 8.69 million bitcoin, that is 45.6% of the supply. So usually we have seen when the whale activity is of such a high degree, it has given some up moves. So for example, you see it here, then here, then the uptrend. This is a direct correlation with price, even here. And now we have seen it here since 28k. They have been adding per month to their balances, and right now it is reaching at its peak, though not at the all-time high, but still at the highest of the regions. So what it has shown us before is, so there's another chart. So this is the chart which shows all exchanges to derivative exchange flow mean. It's 30-day moving average. So what we see is that whales seem to punt a long position by sending Bitcoin from other exchanges to derivative exchanges when the price is at bottom region. Now what we see in this chart is that whenever the price was at a lower region, then we saw distribution in price, and whenever this whale to exchange derivative exchange ratio increases, like here, we see accumulation in price. So we saw it here. So whenever it is around 3, we see whale sending their Bitcoin to derivative exchanges, and it has caused an upward movement in price. And right now you see how high it is. It is at an all-time high of its past 3 years since 2017. and this means that whales want to take long positions. Whales might be playing altcoins, and historically there are many data points on this chart which shows that this has caused an upward movement in price, and the bottom area can be considered as an area of accumulation. So we have this data point here, we have this data point here, we have this data point where the high was made here after the corona drop. Then this 2018 bottom also we saw this surge in this ratio, 30-day moving average of all exchanges derivative exchange flow mean for the whales. So this is a good indication we got in this zone when price was between below 20k. So apart from the whales, if we see all the participants in the market, we see their net position change for all exchanges. Now what we see in this chart is that we saw the largest outflow on record when the price was at 18k, and there was an outflow of 151,000 Bitcoin monthly position change. This was the largest recorded outflow since past 4 years, and you can see this level here, the outflow, and at the same price or just below it here in this region we saw a similar kind of an outflow, and it gave rise to the price. It doesn't has to be, because the condition is different. Here we were coming from below. The context is that we are in a downtrend here, and here the uptrend had started. But what is significant is that we are seeing that at these prices there are outflows, heavy outflows, and it can have various reasons attached to it. One can be that people are buying Bitcoin and putting it into cold storage because they think that this is a good price to buy and save it in a place which is secure. Second reason can be that there is a lot of negativity right now around exchanges and how safe they are, and also because of the regulations and tax laws of different countries, where people are feeling insecure for keeping their money on exchanges. For example, in India there is a new tax law where they will charge huge taxes on exchanges. There will be a tax deducted at source for all trading activities on the exchanges. So what people want to do is they want to probably take out their money from the exchanges where KYC requirement is there, and they want to keep it in their ledger or any other wallet. So that also can be the reason, but still this remains a chart which gives us a bullish outlook. We saw selling here where there was a lot of inflows for selling. Then we saw at 29k we saw outflows, and then we saw upward movement in price. We saw outflows here, then we saw an upward movement in price. Now we have seen significant outflows here, though it was an inverse correlation. Now we have seen even greater outflows. So this is bullish in my opinion for now. It has to be seen in confluence with other metrics. Next we have is the illiquid supply. So we have spoken about illiquid supply in our previous reports all the time. So what it means is that the supply is moving to the hodlers who generally don't sell. They are mostly mostly people who are holding Bitcoin for more than 2 years, and they don't sell on very regular basis, and hence the supply is termed as illiquid. Liquid supply is which is exchanged on the market very quickly. So what we have seen a liquid supply metric do in 2020, it had a direct relationship with price. The liquid supply was increasing, more and more people were holding Bitcoin, and they were holding for a significant period of time, more than 2 years, and hence the illiquid supply kept on increasing and the price kept on increasing. This also gave us a good indication of heavy selling happening at the first stop. So you saw illiquid supply started dropping before the price dropped. Right now you see that it dropped till this level before the big dump of 2021. So this is a good indication of when heavy selling happens. So it had direct relationship here, it had direct relationship here, and now here also after the 28k bottom, when the liquid supply was increasing, the price was increasing. So it had direct relationship here also. The significant change of this whole data point happened after the second top, where we saw illiquid supply increasing but the price started decreasing. It's started having an inverse relationship with price as opposed to the direct relationship it had earlier in whole of the 2 years before the second top. But what we know is the meaning of illiquid supply increasing means that the people who are holding above 2 years, they are increasing in number, increasing in their holdings. So eventually it is a bullish indicator of price, though it has been in an inverse relationship, but still logically it remains as a bullish indicator, and it has reached its all-time high. It means that in all of this downward movement in price, people kept on holding, and this we can see from SOPR also why long-term holder SOPR is under 1 and long-term holders are suffering loss right now, because they kept on holding even when the price came down, and they even kept on adding to their positions. But for the long term, this metric is significant. Next we see the Bitcoin number of addresses holding more than 1 Bitcoin. So it has reached its all-time high. This has also got a direct relationship with price, and you see here this started decreasing when the price was at 60k. When the first top was getting made, it got flat above 54k, and then it started dropping. So we saw a direct relationship when the price was going down also, and then it started increasing and the price started increasing, and we had a direct relationship. We had direct relationship with price throughout. Here we saw a change in position where inverse relationship was established, and whole network as a whole suffered loss in this downtrend because people kept on adding to their Bitcoin, and they're still adding. It's reached its all-time high and still the price went down. So for long term, this is a bullish indicator, and right now also it is increasing with a great pace. So next we have this very nice indicator, hash ribbons. It was a good indicator for us in the Discord, where we saw the indicator turned red when the price was at 23k, and we knew that it is not good for price. The hash ribbons indicate that BTC will hit a bottom when miners give up hope. That is when Bitcoin mining becomes more expensive in comparison to its cost. So in our previous videos, we have seen various miners metrics from which we ascertained that most of the miners were either at break even or were selling at a loss because their price of production was even below their electricity cost of production. So this ribbon, what it tells us is that whenever it turns red, it means that the 30-day moving average exceeds the 60-day moving average when there is a transition from light red to dark red area on the chart. And when it turns from light red to dark red, then signifies that the cost which the miners are incurring, it is stabilizing, it is returning to break even. And when it turns from dark red to white, then it means that's been a great opportunity to buy. Whenever it has turned from light red to dark red, this is a start of bad days. And when it turns from red to white, then it is signifying a bullish outlook. So see, when the bottom was formed here, first white, then light red, and then red, it means that miners started incurring losses here. Then they capitulated. Then it turned dark red. That means that it stabilized, it was returning to, they started buying again. Or when it turned from red to white, it meant that they stopped selling, the capitulation was over, and it had a positive impact on the price. So right now also, we gave this on 9th of June, this metric in our Discord. What we see now is, So here we saw this, we gave this indicator here, and then we saw a capitulation move after this signal reflected light red, and then we saw this in the bad days. It was still light red for quite a bit, and then on 5th of July we saw the ribbons turn dark red. So that implied that the minor capitulation 30-day moving average came above the 60-day moving average, indicating the first signs of bullishness. Now we are waiting for it to be white only, not turn to white from dark red, and that will give us this zone where whenever this has happened, we have seen upward movement in price. So this is a good indicator telling us that capitulation of miners is over and they have started buying. So we can see this in other charts also. Miners started accumulating after getting capitulated. They have started accumulating and buying again. Another indicator for us is relative strength index, and this is something which really tells us that these are oversold conditions. And so RSI score is given to the month being observed relative to the previous 12 months, and this is at an all-time low. Each dot here represents a month of time, and its score is evaluated relative to the previous 12 months. So every dot previous 12 months, and then the score is given. So every dot represents a relative score of 12 months. So this is a sign that the market is oversold in oversold conditions. This is dormancy flow. We have seen that it has reached the all-time low. We will go into the details of how to understand dormancy flow in our next video, but what is to be seen here is whenever it has gone below this level or at this level, we have seen a bottom formation here, and this corona drop. So right now it is at all-time low. It is below even 2015 and 2013-14 levels. So this is significant, and this also signifies that we are in oversold conditions. This is the reserve risk. Reserve risk is also at an all-time low. This also shows that there is the long-term holders are holding their coins, and they have for future they have confidence in the market. It's the same chart. This just shows that it has even gone below 2015 level, the bear market level. It means that lot of long-term holders, they are still holding the coins, though at loss, and they are adding to their positions. And this has signified, whenever it has turned from here, it has signified about bottom formation. Right now we have just reached here. It can always make a structure like this and give some sideways also. We can be right here in price for this bull market, and it can give one up movement and do some sideways before the next run starts. So it doesn't signify a reversal. For reversal metrics you have to do your TA, but what the Onchain is telling us is that these are the places where you want to be accumulating. For fear and greed index, right now we are at extreme fear stage. Right now we are at 20 points. So you can see how this has been an area of value, though we have stayed in extreme fear since quite a bit, but it remains an area of value for longer term. So we have seen many bullish indicators and on-chain data. Just to remind you of the risk, this remains the risk right now, that VPVR, the maximum value transacted value, remains at the zone between 9k to 12k. This is also the monthly electric production cost for mining. This has many other confluences also. We have also seen in 2013, 15 and 17, 18 bear markets, previous bear markets, that when the bear market starts, it generally reaches an area where lot of transactions and volume has traded. So this area is also an 83% correction from the top. We have seen in past 3 bear cycles that 83% correction has occurred, and right now we have 40% more to go if we have to reach this level. I'm not saying that we will reach this level, but we have to be mindful of the risk while we play the on-chain data and the other data to the upside. This is also the target and measured move of the bear flags which have been formed in this downtrend. And most of the on-chain data is MVRV, reserve risk. They have taken about 100 to 200 days even after hitting the bottom, and the market has made a sideways pattern in the previous bear markets. So when we are playing to the upside, we have to be mindful of that, and we have to take profit whenever we reach significant resistance. 26k, 30k remains significant resistances right now. 22,500 in immediate short term. So guys, thank you for watching this video till the end. I wish you very well for your trading. Please stay calm, don't be greedy, and trade mindfully and live mindfully also. Thank you very much.